Hello traders, Rich here and welcome to Kucoin episode 33, and today we are going to go over Bitcoin analysis. As usual, if you don't know about Kucoin, it's one of the largest crypto exchanges in the world with over 700 billion traded volume on the platform and 10 million registered users from more than 200 different countries. Kucoin has many features like margin trading, spot trading, mining pool, staking, lending, and many more with over 700 listed coins. If you don't have an account yet, I'll make sure to attach my referral link in the description below. And if you create an account through it, you'll benefit from 20% discounts on your trading fees. So let's get started. And as usual, cheers. As we clearly see, Bitcoin has been bearish, especially lately after FTX crash. Unfortunately, we broke below the 18K support zone previously, multiple rejections from, broken downward. Now it's acting as a resistance, price rejected it and we traded lower. We are currently stuck inside this range between 15K 600 and the 18K. Moreover, we are now bearish, trading inside this bearish channel. We've got our impulse, correction, and impulse. So we might have a correction movement upward before we trade lower. So how do we know if we will have a correction from here or we'll keep on trading lower? We've got two possible scenarios. That's why trading is reactive and not predictive. So we can't really know until we got some signs of strength of the bulls or the bears. So clearly now the bears are in control and we are forming like a pennant, a flag, or like a descending triangle. So a pattern here of this consolidation. If this pattern is broken downward, or in short, if you want, as a clean manner, if we break below the 15K 600, then we'll be expecting one more bearish impulse movement downward. Or if we break this pattern upward and above the 18K, then we'll be expecting a movement till the previous supply zone where the crash happens around the 20K. We'll see it better on H4 time frame. We had an immediate shift in momentum lower starting from the 20K, which is also lining up with this upper trend line in blue, also a minor support and resistance. Now if you zoom into lower time frames to H4, we can see it even better. We are forming a descending triangle. I also posted it as a picture analysis on TradingView just now, that if we break this one downward, we'll be expecting a bearish movement downward. If we break it upward, we'll be expecting a movement to the 18K, and then if we break the 18K upward, we'll be expecting a movement to the 20K. But for now, let's take it step by step. We are trading inside this descending triangle. If you zoom into lower time frames, we know that we'll be trading this range, which is in the shape of a descending triangle. Previously, the bears took over here, and then I also posted this analysis. In this analysis, the bulls took over here, and now we formed a symmetric triangle from H1 from a short-term perspective, and the bears, as you clearly see today, took over here. So now we're expecting a movement till the next support zone, which is around 15K 900, which is this area here, starting from here till around the 15,600, where of course we'll be looking for buy setups unless it's broken downward. Then the bearish scenario would be activated, as I showed you from H4 time frame. So of course this didn't happen yet, but I'll keep it as a possible scenario if we break like this one higher. Okay, so this is basically it. We are now bearish from a medium-term perspective from H4 and also bearish from a short-term perspective. We might see a correction movement after this impulse, correction movement upward before we dive lower. Of course, this bearish scenario now will be invalidated if we break above this area again. That's why you see my alert here. In this case, we'll be expecting price to dive inside the resistance and then trade higher. So as you can clearly see, always wait for the market to make the first move, and then we react accordingly. Best of luck, be safe, trade safe, and I'll see you on the next one.